Very good morning and welcome to this Santander Asset Management post-election call. Yesterday, UK finally got to go to the polls and, as predicted, returned a large Labour majority. It's the first time that the Labour government have won an election in 19 years. So in order to understand what this win might mean for both the economy, for markets, for the incoming administration and the challenges that they will have, I'm delighted to introduce you to today's guest speaker, Hayden Davis. Hayden is the head of quantitative research here at Santander Asset Management. If you have any questions as we work through the call, then if you just submit them using the Q&A button towards the bottom of the page, and then we'll work through those towards the end of the call. So without further ado, let me introduce you to Hayden. Hayden.
Thank you, Julian, and good morning, everyone. Right, let's make a start, because I know some people have been up all night watching the results filter in, and you must be very, very tired. I sort of took it for granted that things were going to finish the way that we sort of known throughout the campaign, so I'm feeling a little bit fresher than maybe some of you. I want to talk a little bit about the election, what the financial markets have made of it, and then a little bit about the background and the challenges that Keir Starmer will face, and possibly what the ramifications are for taxes and spending. So, long story short, the election caused barely a ripple in the financial markets. So today's results, it's very difficult to see any movement in the financial markets. That's partly because we've sort of known the outcome all along. And actually, the markets have been more focused on two other elections, the French legislative elections, which we've had last weekend, and the second round this coming weekend. And of course, the US presidential election, with speculation that Joe Biden might potentially drop out. Compared to those, the UK election has really sort of gone unnoticed in the financial markets. And one reason for that, apart from the fact that it's sort of been a pretty much a one-horse race all along, has been that the markets stopped worrying about what a Labour government might mean quite some time ago. Now, if we turn back the clock to the last election with Corbyn running as the Labour candidate for Prime Minister, then it was a very different story. The markets would have been very worried indeed if he had entered number 10. But during the course of this Parliament, we've seen the financial markets worry less about what a Labour government would look like, and perhaps worry a little bit more about what the Conservatives mean, given the sort of the turnover we've seen in prime ministers and chancellors of the Exchequer during the last 5 years. And I suppose the big turning point was the mini budget under Liz Truss and Chancellor Kwasi Kwarteng back in 2022. Not only was that a turning point for the Conservatives' fortunes in the polls, but also you started to see the markets start to think that actually Labour government might be a little bit more responsible than a Conservative one. So the bottom chart that we can see here shows the Conservative lead over Labour. So that's the red line, and it's on the axis on the right hand side. You can see that falling throughout the last 5 years. And the blue line is the pound. Now, I strongly advise drawing any strong inferences from this kind of chart, but the message, I think there is still quite a clear message that certainly since 2022, as the Conservatives poll lead has turned negative, ironically, the pound has got stronger. So if you're going to draw any inferences, and I said they're weak ones, certainly you would have to say that the markets weren't worried about a Labour Prime Minister. And certainly it's not the case, as I said, that they would have been as anxious as they would have been if the Keir Starmer wasn't Keir Starmer, he was actually Jeremy Corbyn. So a lot has changed in 4 years. And what with the election being, I suppose, a bit of an anticlimax in terms of no surprises, that really hasn't changed. Now, what the markets will be focused on will be the policies that we start to see in the next 100 days and in the first couple of years. But for the moment, yes, the election has gone pretty much unnoticed. and the markets have been focused on far more important things. Moving on. So just to recap on what actually happened last night, and I'm sure you probably don't need much reminder, but of course Labour won. That goes without saying. They've won a landslide victory. They've won the third largest majority since the Second World War. All of that's given, but it's not really the story of Labour winning. It's the story of the Conservatives losing. And the three charts here, I hope, demonstrate that. So the chart on the left shows the share of the vote. Labour won about 34% of the vote. The Conservatives, I think about 22, 23 as things currently stand. In the middle, we've got the change in the share of the vote. And on the right-hand side, we've got the parliamentary seats that have been won. I think we're still about 4 to go when I was putting this together. So the chart in the middle, I think, probably shows the whole story. So Labour, yes, they've won a landslide, but they increased their share of the vote by about 1.5%. So not really a resounding victory for them. The big story is the collapse in the Conservatives' vote. You can see that their share of the vote fell 20%. And if anyone's a winner, maybe the Greens as well, and in the others, because the others did quite well. But of course, it's Reform, and they increased their share of the vote by 12%. And in fact, if those voters who had switched to voting Reform had actually voted for the Conservatives, and of course that wouldn't necessarily all would do that, the Conservatives would have won this election if those votes had been distributed evenly, which of course we know that constituencies aren't homogenous, they're all very different. But that really does, I suppose, underline the whole message here, that it was the collapse in the Conservatives' vote that lost this election. It wasn't the surge in Labour's vote that won this election. And I suppose the final message here is, of course, that Labour have this huge majority of 170 plus seats, and essentially carte blanche to do whatever they want, which some might consider unfair, but it's the way our electoral system works. From a market's perspective, this is actually one of the better outcomes. If Labour's seats had been much smaller, if it hadn't had a commanding majority, if it had to rely on support from the other parties, principally, of course, the Liberal Democrats, that would have led to an awful lot of uncertainty over what it could actually push through. And markets would start to worry about, well, maybe Keir Starmer would start to become hostage to some of the factions, particularly the left-wing factions in his party. The Labour Party has factions too, just like the Conservative Party. And of course, we've seen over the last 5 years that prime ministers in the Conservative government have pretty much been hobbled by the different factions within their party and achieved very little in the last 5 years. Labour now has a clear mandate for change. Keir Starmer has a clear control over his party. Really, he can really take control of things. He doesn't have to pander to the different wings and factions in his party, and that is reassuring, because it offers the promise of stability. And markets like stability, and hopefully this will also lead to stability in policy making. That will be good for firms and in their investment plans, and joined up policy. That's what the markets really want to see. Maybe better relationships with our international partners as well. Remember, in the last 14 years, the time that the Conservatives have been in power, we have seen 9 health secretaries. I think 7 of those in the last 6 years. We've seen 7 transport secretaries. We've seen 10 education secretaries, 9 foreign secretaries, 8 home secretaries, and of course 5 chancellors and 5 prime ministers in the last 5 years. It really does sound like the 12 days of Christmas. And that really does underline the turmoil we've had, and the fact that policy really hasn't been consistent, even in 14 years of Conservative rule, because of the different factions that have held control over that period. And that is what certainly the markets and investors will be looking for: more consistency and perhaps sort of clearer thinking, perhaps longer term thinking. So if we can move on. Now, that majority that Keir Starmer has is a tremendous bonus for him. It's a tremendous boost. As I said, it gives him essentially the power to ignore some of the elements in his party. Of course, markets will be looking at exactly what the trade unions demand, and we know they'll be demanding a lot. Obviously, there are a lot of public sector strikes still ongoing, the doctors, for example, the train drivers, and the markets will wonder or be looking for evidence of how he's going to resolve those disputes and still maintain his sort of centre-left credentials. I think it's very interesting to think about actually what this election was about, or as far from the point of view of voters. Why were they voting for Labour as opposed to the Conservatives, for example? And this opinion poll that was conducted for the Financial Times back at the end of May, I think, is quite illustrative. So the poll that was conducted by Ipsos for the Financial Times asked those voters who were considering voting for Labour why they might do so. And of course, lots of different reasons why they might do so. I've highlighted two in red. The most popular response, Britain needs a change. And the third most popular response, replace the Conservative Party. Those are hardly ringing endorsements for Keir Starmer for Labour. Those aren't, we want a Labour government. We want the economy to be run in this way. We want social policy to be run in this way. We want redistribution. So sure, people want a better economy, they want better education, they certainly want better hospitals, and they'd like an ambulance to turn up within an hour or so as opposed to 2 days. But voters have voted for change. They don't know what change they want, but they certainly know they want something different. And that is what Keir Starmer has to deliver. And unfortunately, that is going to be quite difficult, simply because there is no money for that. And of course, the story of the manifestos has been the policy, the parties, certainly the Conservatives and the Labour Party at least, have been in what has been described as an arms race of promising not to change things, and yet voters are demanding change. So Keir Starmer has a lot to do. And coming back to his, the share of the vote that Labour won, remember that barely budged, that did not increase. And so it's not quite the ringing endorsement of Labour that the majority and the number of seats they've won looks on face value. And given the resurgence in reform and the fact that if you put the reform vote together with the Conservatives, the Labour would have lost this election. Keir Starmer, Rachel Reeves, the incoming Chancellor, for example, and the rest of the Labour Party and those who enter the cabinet will be very aware that they need to deliver change when there's no money, which is difficult. And they also need to be able to demonstrate in 5 years' time how that change has improved people's lives. In the next 100 days or so, voters will still give credit to Labour for the poor state of the economy, that they've inherited the poor state of the public finances. But in 5 years' time, they will not make that allowance. They will basically say, you've had 5 years, you should have turned things around by now. So there is quite a big ask for Keir Starmer to actually start to deliver on his programme so that he can win a second term, because his programme certainly requires a second term at least, and probably a third term to deliver long-term change. So that is the hurdle that Labour faces. Moving on, I just want to highlight, I suppose, the bad state of the public finances. So the problem is that there is no money. There's no money in the bank. There's no money in number 11 Downing Street, which of course the residence of the Chancellor of the Exchequer. There's nothing in the bottom of the piggy bank. And the blue line here is the national debt, excluding the Bank of England's debt, which is a very technical element, but the national debt. And you can see that it's just over 90% of economic output. It's at its highest level since, I think, 1963. That's not exactly a ringing endorsement of 14 years of Conservative Party that would generally consider themselves responsible stewards of the public finances. And you can see actually public debt, national debt, is expected to increase as things stand on the current spending and tax plans that were put in place by the Conservatives. It's expected to increase for the next 4 years and then start falling in the 5th year. So another way of looking at this is that Keir Starmer enters number 10, and there is a very big mortgage on number 10 Downing Street. And that is his big problem. So it's very difficult for him to raise more debt. if he wants to spend more, he's going to have to find the taxes. And of course, he's promised not to be irresponsible with taxation. Moving on to the next slide. So the public sector financial forecasts that Labour has promised to stick to the sort of the projections and rules put in place by the Conservatives, they're extraordinarily demanding. And behind that story of debt at its highest level in 60 years are some other sort of stark statistics about how poor the public finances are. So the red line here is public spending as a share of economic output. You can see that by and large, it's sort of the highest levels that we've seen pretty much in the last 50 years, apart from occasional recessions, the COVID experience, the recession after the global financial crisis. And we still have crumbling schools, hospital waiting lists that go around the corner. So this is a big challenge. So spending is already high as a share of economic output, certainly by UK standards, and even by the standards of some of our European partners as well. So there really is not much room really to raise spending too much more. Now, the sort of more worrying statistic is taxes, which is the sort of the lighter blue line here. The darker blue line is public sector receipts. So public sector receipts consist of taxes, but then also essentially interest that the public sector earns, and also payment for services. So, for example, rents on social housing that the public sector maintains, or this is the interest on the student debt, for example. You can see that public sector receipts, the darker line here, is at its highest level pretty much since, again, the 60s. And that's certainly true of taxes. So taxes are at the highest levels since round about the sort of late 1940s. So, and you can also see, of course, that both of those are projected to continue increasing through this Parliament. And that's irrespective of any changes that the Conservatives would have made following an election win for them, and any changes that Labour usher in. So this is a very dismal fiscal picture. So taxes are already at mouth-wateringly tight levels. And of course, people are feeling that after the cost of living crisis. So Keir Starmer's big challenge will be to deliver change without dramatically increasing taxes on most people at least, and also somehow finding money to spend on public services. So the public spending forecasts over the next 4 years basically beg a belief. And these are the forecasts that the Conservatives put together and Labour have signed up for. They basically make increase spending on health and education a little bit, but they also entail huge cuts to spending on local government, on transport, and on justice, the court system, etc. So I'm afraid the message is that those potholes in the road that you basically bump over every day, they aren't getting filled anytime soon. But however, of course, there are certain ways that the government, that Keir Starmer could raise taxes more than he's suggested in the manifesto. And the likelihood is that there will be some increases in some taxes and council taxes in the south. Bear in mind that most of local government funding comes from central government, not from council tax. So there is scope to shift that to less affluent areas away from more affluent areas, which would mean higher council taxes in those more affluent areas, particularly in London and the south. That's a scope to do that. And possibly he can raise taxes on capital gains, on inheritance, and there are some few other things that would free up some money to spend on some of the projects that hopefully will deliver a higher rate of growth in the future. And I think that it's very important that to contrast Keir Starmer's story about growth and the need for growth, the need for change, to that of Liz Truss. So Liz Truss's mini budget in 2022 was about going for growth, supposedly, and Labour wants to increase growth. The difference between them is that Liz Truss budget was about cutting taxes to encourage people to spend. In other words, to bring spending forward that they would have spent the following year or the year after. So in other words, to cannibalise future growth for the sake of growth now. What Keir Starmer and Rachel Reeves are promising, and let's hope they're able to deliver on this, is actually long-term growth, growth that can be sustained, and that will crucially depend on the mix of policies that they're able to put in place and reform public services at the same time as finding some more money essentially to help that reform at the same time. I know I've spoken for 20 minutes, so I'm hoping that there are some questions out there. So let me hand it back to Julian.
Thanks, Hayden. Thanks for a really comprehensive overview. It's funny, isn't it? You opened it on the basis that there's probably not much to talk about, but there probably is. Just hope that Keir Starmer isn't listening into this call. I think the subject of growth is the key one in terms of how they can grow the economy that you touched upon. So what would you see as their sort of short-term sort of easy wins in that sense? What would you expect to see in the first, the famous 100 days?
Well, I think they're going to do a proper review of the finances and the state of number 10. And I think when Keir Starmer moves into number 10 later, he's probably going to find the floorboards gone and just a light bulb there. And probably that's also true of number 11 when Rachel Reeves moves in. I think the message that they'll want to convey to voters is to make it very clear this is what we've inherited, because it is a mess, and they need to, I suppose, get that goodwill behind them in order to buy some goodwill for some of the policies that they will try to usher through. Now, of course, they've made lots of promises not to raise the rates of income tax. Crucially, they have not promised not to freeze the personal tax allowance, which is one of the reasons why the share of tax as a share of economic output is projected to increase over the next parliament, and they can't afford to unfreeze the personal allowance. But they've also promised not to raise the main rate of VAT, etc. But they have some options on VAT. Of course, the most high profile of those is raising VAT on private schools. They have some other options on VAT. So, for example, financial services, which of course we're in the business of selling and providing to clients, by and large, those are VAT free. So there's some scope to potentially extend VAT, widen the tax base. Compared to other countries, certainly in Europe at least, the VAT base is quite narrow. Similarly, small businesses don't have to register for VAT until they have a revenue of £90,000, which is a way for them to avoid tax for some businesses. And that is, again, quite a high limit compared to some of our European competitors. So they could cut the registration limit to about 60,000, find maybe $1 billion or $2 billion that way. They could obviously raise inheritance tax. That's obviously been trailed in the newspapers. On pensions, well, they've promised not to reintroduce the lifetime allowance, but of course they could restrict the tax relief on contributions to the basic rate of income tax, so the higher rate taxpayers don't benefit from that. And there's a good case for that, given that very few pension holders actually pay higher rate tax. That would save $7 billion, so that there are these savings to be found that would not break any of the manifesto promises, and potentially they could find £20 billion in the short term.
Thanks, Hayden. Right, we're getting some questions in, so thanks for those. If you've got any more questions you want to ask, just pop them in the Q&A box. Just conscious of time, so if we can have sort of as punchy an answers as we possibly can. So let's start with, how might the outcome of the UK election impact the value of the British stock indices in the short to medium term?
Well, I guess that's easy to answer. In the short term, there's been no bump in the FTSE 100 or the FTSE 250 this morning. So the market's basically taking the view, well, Labour has promised to look a lot like the Conservatives, sound a lot like the Conservatives, tax a lot like the Conservatives. So we'll take it as given. We've got the Conservatives just wear red ties. But obviously, if Labour does manage to improve the growth potential of this country so that sustainable growth is higher, then that would be good news for UK stocks, particularly the FTSE 250, the smaller stocks. The FTSE 100 earns more of its profits from abroad, and that would be very good for UK markets, which are undervalued. Obviously, a lot of house builders, for example, in the FTSE 250, banks as well, they would benefit from stronger UK growth. I think that's a story more for maybe 2-3 years out. Good reasons to buy UK stocks at the moment because they're cheap, etc., and also because the Bank of England will be cutting interest rates soon. But in terms of how the election impacts that view of stocks, it's more, we would need to see Keir Starmer and Rachel Reeves delivering on some of their promises of change.
Brilliant, thank you. Okay, what is your view on the interaction between Labour and Biden now, and perhaps Trump later?
Well, obviously Biden, Democrat, Labour, Labour. So both sort of centre left. So that relationship I would expect to be good. But bear in mind that America is across the board, whether you're Republican or Democrat, is essentially protectionist. It believes in jobs for Americans, factories in America, and America comes first. And that's true of Biden. It's more true of Trump. But essentially, Biden's not going to offer Keir Starmer, or indeed anyone else in Europe, too much in the way of support, meaningful support, or economic advantages, certainly no trade deals or anything like that. So a better relationship, I think, potentially also with Trump. If Keir Starmer is generally a listener and less likely to sort of cause ruptures across our international relationships, I think, than some of the prime ministers we've had recently. So that's good news. But Trump will look at Britain in the way it is as a small trading partner of the US with a pretty meager army and navy, and so I don't really think that the UK will feature that heavily in Trump's considerations, just as it doesn't really feature very heavily in Biden's considerations. I think what's more important is how Europe responds to this, and on that regard, Europe will be pleased to see a prime minister who wants to engage, perhaps more in a compromising way, but they will want to see really that mood in the UK and sort of views on our relationships with Europe have changed meaningfully. So any improvement in our relationships with Europe really is going to take years. It's not something that happens simply with somebody new out entering number 10.
Perfect. And then I'm just conscious of time. Two more quick ones. What do you foresee would be the impact of this change on the political landscape on small business growth?
Well, I guess what question here is, what do you mean by small businesses? And Labour are very well prepared. They've been working hard in the background here. They will be aware that to deliver growth, we need infrastructure spending, we need investment, more investment from firms, more investment in R&D. By and large, it's not small firms that do that, it's large and middle-sized firms. So I think a lot of their focus will be on those kind of firms as opposed to small businesses. I don't think they'll rock the boat too much on the small business front, but in terms of generating growth and highly skilled jobs, their focus will be on, as I said, the sort of larger businesses and sort of more middle term, the large construction firms, for example. Construction is something we hear more about. There's obviously a huge shortage of homes that needs to be remedied. They want to reform the apprenticeship system. So particularly in builders, for example, I would expect that to be good for the builders, although there'll be a quid pro quo there, that Labour will take the view that maybe the builders have been hoarding land, etc., haven't been building as much as they could be. But hopefully there will be a sort of a more engaging, I suppose, spirit with business. Remember, during the Brexit campaign, and businesses were, by and large, in favour of Remain. Boris Johnson famously said, and I can't say it on this call, a well-known word beginning with F, business. So business at the very least will be hoping for a government that sees the value of business and the importance of business, the importance of investment, the importance of jobs, and a change in that relationship between business and government. They'll also, of course, be wary of what the influence of the trade unions on labour means for the business environment as well, and that's to be seen.
Thanks, Hayden. Again, conscious of time, we've used up your 30 minutes, so it just remains for me to thank you for your time, Hayden, for your knowledge and expertise around this area, and of course, thank you for attending, all of you, for dialing in and for your questions. For those questions that we weren't able to answer during the call, we will come back to you separately on those, but it just remains for me to thank you once again and wish you all a very good weekend. Bye now.